Welcome to the world of Forex trading. Today, we're going to master the fundamental building blocks: long, short, bid, ask, and spread. Understanding these concepts is crucial before you place your first trade. Let's start with the basic concept of market positions. In Forex, you are always trading a pair of currencies. This means you can profit whether the market goes up or down. First, let's look at the long position. To go long simply means you are buying a currency with the expectation that its price will rise. Think of it like buying a house. You purchase it today at a low price, hoping to sell it later for a much higher profit. When the value increases, you close the position, and the difference between your buy and sell price is your profit. Now, let's talk about going short. This is where Forex gets interesting. You can profit when a currency's value is falling. Going short means you sell a currency pair first, anticipating the price will drop, so you can buy it back cheaper later. It's like borrowing a phone from a friend, selling it for $100, then buying it back for $80 when the price drops. You return the phone and keep the $20 difference. In the Forex market, this process happens instantly through your broker. Next, let's look at the prices you see on your screen. You will always see two: the bid and the ask. The bid is the price the market is willing to pay to buy the currency from you. This is the price you sell at. Ask is the price at which the market will sell the currency to you. This is the price you buy at. Think of it like a car dealership. The price they offer to buy your old car is the bid, and the price they sell it for is the ask. The ask is always higher than the bid. The difference between these two numbers is what we call the spread. The spread is essentially the cost of the trade. It's how brokers make their money instead of charging a direct commission. For example, if the bid for USD is 1.1000 and the ask is 1.1002, the spread is 2 pips. As a trader, you want to look for pairs with low spreads, especially if you are trading frequently, to keep your costs down. Highly liquid pairs like the euro and US dollar usually have the lowest spreads because they are traded so heavily. By understanding long, short, bid, ask, and spread, you now have the map to navigate the Forex market. Remember, trading involves risk, so always use a demo account to practice these concepts before using real capital. Consistency and education are your best tools. Keep learning, stay disciplined, and happy trading. Subscribe for more Forex basics and advanced strategies. See you in the next lesson.